Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this on Monday, December 23rd. With me this week is Dave Kurzawski, team lead in the Chicago office, and we had originally planned to record this on Thursday prior to the U.S. milk production report, and I'm glad that we waited until after the report because there were some pretty big surprises in there. I thought total U.S. milk production would be up 0.2% year over year, the same growth rate that we saw for the month of October. And instead, headline milk production in the U.S. was down 1% from a year ago. And that was almost completely driven by California, where the USDA says milk production was down over 9%. And that's a record large year-over-year decline for California's milk production, going all the way back to 1950. So it's a big deal. Dave, what did you think about the milk production report?
Yeah, I mean, I don't want to just come on your podcast and agree with everything you say, but I also think it's a big deal. Happy holidays, by the way, Nate. Yeah, no, I think it's a big deal. I think, I think we have a situation where, demand has probably been, lackluster in certain parts, parts of the business that we're doing. So like whether that's, you got three main areas, right? You've got the retail, you've got food service, which is going to be like your restaurant chains, and you've got industrial use. And I think the food service the last few months has really taken the bigger hit. If anything, we've seen, traffic counts down at various restaurants and things of that nature. So I think there is some questions around demand, but then you get a milk production report like we got last week, and you start to try to okay, let's rethink what we know here, because it's kind of the same. It's kind of the same situation we've dealt with all year, which has been that the supply side of the equation, whether you look at milk production or cheese production, down the line, except for maybe butter production, has been more bullish, or has had more events of kind of like bullish nature throughout the course of 2020.
Weak production all year long.
Yeah, weak production all year long. Right, exactly. Pardon me. Yeah. And so that's always been kind of like the bullish angle. The demand side has been where the bears can kind of come out, and obviously we can see what happened from September, the peak over $2 in cheese, for example, or even over $3 in butter, and then in the past 10 to 12 weeks we've really seen the prices come down quite considerably until very recently. You get a little bit of a bump on butter. You're getting some stability at a higher price level on non-fat, but then cheese, in class three is up $2 from where it was a couple of weeks ago. So, maybe that's already accounted for some of this milk production, but I think the crux of it here is this milk production number that's down 9.2% in California is a big number. And in the short run, in the next, 30 to 60 days, it could cause some issues with regards to available supply, almost regardless of what the demand looks like. I mean, unless demand is just really god awful as we go into the first part of the year, you actually might find that some people come up a little bit short on product, or at least that's the risk that we see today.
We had heard anecdotally that production in California during November was down in the range of 7 to 10%, and I struggled to believe it, given that cheese prices were trending lower through November. It just didn't make sense that California's production could be down that much, and that we could see the kind of weakness that we saw in the market. But as you said, it must be just weak demand that has hit us. But I agree with you on the bullish short-term risks. I'm bullish on the cheese market even before this milk production report. You look at cheese stocks at the end of October that were down over 8%. We're going to get the November cold storage numbers here in a couple of hours. But with inventories down that much year over year, it would still argue for $2 cheese pricing. And then short term, you throw in the production issues in California, and even a little bit of a slowdown for other parts of the country as well. and it gets a bit supportive if there's any kind of demand out there.
Yeah, yeah, and I think that it becomes interesting too when we look at the cost of money, which is different in the last year than it really has been for much of our career, really, or at least my career. And I would say that did it shift some behavior in terms of willingness to hold inventory? Um, I think that you've kind of hit on it a little bit with regard to prices in November were down, but yet we were seeing now we can look back and say, oh my goodness, milk production in California was down 9.2%. That doesn't seem to add up. But there may be, there may be a time lag between things. There might have been just more inventory that was available in November against weaker demand. And when we see that, demand maybe picks up a little bit, some pipeline refilling, whatever it may be, we test whether or not that inventory is even there. Maybe it's gotten whittled down over the past couple of weeks. In other words, it just could be some time lags between fresh milk production and the cheese availability and demand. They might not all be lining up like we normally would kind of say that they might.
I
So
think I think where you're going is sentiment. That the sentiment in cheese has just been so bearish with demand weak short term and all of this talk about new capacity coming online that maybe prices got weaker than they should have given how supply was developing. And now we may bump up against some real tightness in fresh availability. And the sentiment won't matter because the cheese might not be there.
yeah, yeah, I would I couldn't have said it better myself. In fact, you said it better for me. I appreciate that. So, yeah, I mean that really is what it comes down to. And also, I think it remains to be seen this bird flu. I mean, obviously, I think there's two main themes going into 2025 outside of what we would normally. I mean, outside of just the normal geopolitical risks and economic risks and all those other things. And those two main things right now, two main forces are is bird flu. Obviously, we realize that you know, the narrative of bird flu, it broke in California and it didn't seem to matter. We're getting accustomed to um, news articles and conversations about bird flu, but we don't know what it's going to do in 2025. Is it going to resurge in places like Texas? Is it going to go away for a couple of years? We don't know. So there is that element. And then the flip side is on the demand side, which is, and we've talked about this at times and over the past year, but these GLP-1 inhibitors, the Ozempics and the Wegovy's and Zepbounds and all these different drugs. And in fact, over the weekend, I was listening to a new podcast and they were talking about a new iteration of this that's slated to come out that's even more effective than Ozempic, for example, sometime in 2025. And I guess so. I was taking a long walk this weekend and I started to think, you know, food companies have to get out ahead of this. They have to start marketing. I think they're, and I'm not, I'm getting on my soapbox a little bit, but they have to start coming out and going, hey, you're on Ozempic, we're on Ozempic. That doesn't mean you can't have a Snickers bar or whatever the case may be. Because I think the past year or two, there's been this kind of, they're at odds with one another. Weight loss drugs and food companies are kind of staying at a distance from one another and the consumer's caught in the middle. I think some of these food companies are going to have to embrace this because I don't think it's going away. I think it's probably going to be something that's, at least for right now, for 2025, is still going to be an issue that faces the dairy industry broadly and dairy demand specifically.
Well, this is an easy prediction to make, Dave, but I will guarantee you that we will get different headwinds and different tailwinds that are probably going to matter more in 2025 than Ozempic. But I do think the bird flu one is an interesting one. I've been reading some articles over the weekend, and there's still a lack of understanding how the virus is moving farm to farm, how widespread it is, and how far it's reaching into other species. And the bird flu story is going to get even more interesting in 2025.
Yeah, yeah. I'll agree with you on that, and we'll say remain to be seen what happens on the weight loss drugs, and what what the impacts are. In the midst of that, I think we walk into 2025 in a lot of the same way that we spent 2024, which is that you've got generally tighter supplies against pockets of demand and more price volatility. It doesn't seem to be real clear one way or the other at this time that there's going to be any sustained, you know, 6-month, 12-month moves for the market in either direction.
I'll agree with you there. And we'll wrap it up. Thanks for your time today, Dave.
Thank you.
The StoneX Dairy team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange-traded and over-the-counter, under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant ACPAT and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA, SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P00000-012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial Pte Ltd Co. Reg. No. 2011305988R SFP is regulated by the Monetary Authority of Singapore and is a capital market service licensee for dealing in capital market products, an exempt financial advisor for advising on investment products and issuing or promulgating analyses/reports on investment products, and a major payment institution for cross-border money transfer service. StoneX Financial HK Limited C.No. BCQ152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial Thai Limited, SFA Akin, 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL, 345646. StoneX Securities Co. Limited, SSJ Co. Reg. No. 010401047199 is regulated by the Japanese Financial Ser. ISIS Agency as a Type I Financial Instruments Business Operator Kanto Local Finance Bureau FIBO No. 291, is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFI NFAID 0476094 or StoneX Markets LLC SXM NFAID 0449652 and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. Recipients should contact SFP at 656-309-1000 for any matters arising from or in connection with this podcast. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. The podcast herein is not directed to or intended for distribution to or use by any person or entity who is a citizen or resident of or located in any locality, state, country, or other jurisdiction where such distribution, publication, availability, or use would be contrary to law or regulation. Copyright 2024 StoneX Group Inc. All rights reserved.